Well, Hindalco is the top loser on the Nifty after another fire at its unit in New York. The company had earlier planned to restart operations at the unit by December, following fires in September as well as in October.
M&M is the top Nifty gainer, up over 1% as multiple brokerages issue bullish calls on the stock after company sets out ambitious growth targets in yesterday's investor meet.
AWL Agri slips nearly around 4% after a block deal sees Adani Commodities sell 7% stake to institutional investors. Max Financial is also trading slightly under pressure after 0.5% equity changes hands via block deals.
Grow's roller coaster ride continues. The stock was up 6% ahead of its second quarter numbers. And if you look at the numbers, revenue, profits and EBITDA have risen sequentially. The stock holding with gains of about 5%. Those numbers right at the bottom of your screen, 25% growth in the profitability and revenues up 13% quarter on quarter as well. Hello and welcome. You're watching us here on Chartbusters. We come to you live from the CNBC-TV18 Motilal Oswal studio. I'm Mangalam Malu, with me Nigel D'Souza. A day where we've sold off a little from the highs, but nothing really to worry about given the sort of heady run that we've seen in the past and the weakness that we saw on Wall Street. We were very close to a record high, and it's understandable that there is some nervousness at the heights, but no real worry because the market's still firmly in buy on dips mode till such time it holds important levels.
Well, that's right, Mangalam. And in fact, we'll say that we're under pressure. We're down 100 points or 0.5%. But you look at the rest of Asia and you'll say, boy, we're doing pretty okay, right? Because the Asian markets actually are under further pressure. Markets out there down between 1 to around 2.5% the last time I checked. So yes, we're down, but not out and not as bad as what the other Asian markets are doing. By the way, you have Grow, that's whose numbers are come out there. And I think the margins have improved considerably, which is good. The absolute EBITDA number as well has seen a good growth, I think. So net profit up 25%. Margins expand a little bit. I missed the top line growth number, but that as well should come up.
Top line is an 11% growth 11%. Quarter on quarter and year on 13% growth quarter on quarter. And year on year there has been a mild decline, but that may well be on account of, some factors that we will get to in the details, I guess. But right now, the EBITDA growth and the profitability is something that the street would be looking at.
Well, indeed. And the stock had corrected close to around 15 to 20% from the recent peak. For the time being, holding with a mild gain of around 5%. Valuation still very, very expensive. Float is very limited as well. So keep an eye out on that one. Let's welcome Manas Jaiswal from manasjaiswal.com, who joins us for a technical check. Manas, what do you do? Market's down 130 points. It has been a buy on dips market. Do you buy today?
Good morning, Nigel. So definitely, because see, yesterday we have seen a breakout and today we have seen some correction. But again, if you're talking about the trend, I believe that till Nifty is trading above 20-day, 10-day moving average, I think the trend will remain positive. So this correction is a great buying opportunity. If you can keep the stop loss below 25,950, then definitely on this correction, you can create long position, because I believe that Nifty can at least test its all-time high of 26,277. So for almost 200 points up move, you can take a long call. Keep your stop loss below 25,950, which is almost 100 points from current levels.
Right. And individual stocks, what are you backing right now?
So good morning, Mangalam. So first one is a buy call on Eicher Motors, where we have seen a flag pattern breakout yesterday. So in Eicher Motors, one can create long position, keep your stop loss below 7,100. Here the target would be around 7,400 in next 2 to 3 trading sessions in Eicher Motors. Second is a buy call on GMR Airports, where we have seen a breakout just a few days back. Today, stock has given a flag pattern breakout. Take a long position here. Stop loss should be around 103, and the new target comes near 110.
All right, we take that point, Manas. Thank you so much for that. Have a good Friday. GMR Airports and Eicher Motors are a couple of stocks that he likes, but just keep an eye out on a couple of these other names as well. Hero MotoCorp hit a fresh record high in yesterday's trading session, continues to do well. We're very interested to see how the IT pack behaves in the second half of trade as well. We've seen some recovery from the lows. Names like TCS, etc. pop up for you on the screen. There's been a mild smidge of a recovery from the lows. Let's get you some ideas for profit from our colleagues at Money Control Pro. Today we have Madhu Chanda Day joining in.
Hi, we are talking about late revenues technology, or Ixigo, that had exhibited impressive growth and innovation in the past few years. While Q2 turned out to be a soft quarter for the industry in general, the GTV growth of Ixigo turned out to be much faster than its large competitor. Sector-specific issues in airline as well as in the train business impacted the performance. Ixigo drives a lot of growth through client stickiness, especially beyond the metro cities, thanks to its value-added offerings. The cost of the growth investment, along with the disruption in the train business, turned out to be a drag for the margin. In addition, one-time ESOP expense took sheen of the numbers. To harness the full potential of technology in the booming travel business, the company has embarked upon a large dose of capital infusion from marquee tech investor. This money would be used for investment in AI, ramping up of the hotel business, inorganic expansion, as well as working capital. Travel is increasingly becoming mandatory rather than an discretionary expense for Indian household. With Indian household per capita income steadily on the rise, the sector is in for explosive growth, and Ixigo has the right playbook to participate, bolstered by the capital.
Well, thanks a lot for that, Madhu. For the time being, step in a short break. On the other side, we'll be joined by the management of CCL Products. We'll discuss the past quarter's numbers and their outlook for the year as well.
Welcome back. You're watching us here on Chartbusters. We're speaking about TCS. Just take a look at Infosys as well. That's moved higher. From the lows, we've seen some traction in a couple of these FMCG names as well. Both Britannia and Asian Paints up in the green right now. But a stock in the red, among the top losers on the Nifty, is Hindalco. Nigel, another fire at their Nogales plant.
Well, that's right. The Oswego plant, another fire has been reported. And, remember, there was a massive fire that was reported in September. Then there was another smaller one in October. So this is the third fire in a matter of around 2 months. To give you a few details with regard to what the management had to say on the Oswego plant, the management commentary in October itself said that they're planning to restart operations at the affected plant by end of December. So that we'll have to see whether or not there's any kind of shift with regard to that deadline. They also said that the cash flow hit could be to the tune of around $550 million, while the EBITDA loss could be to the tune of around $150 million, this in the second half of this fiscal. However, it would only be near-term pain because they have insurance out here. In FY27, they're expecting to recover more of this. So there is some uncertainty with regard to the damage. Some source-based information indicates to me that it's not as bad as what it was feared. The fire was doused in 2 hours in comparison to around 4 to around 5 hours, which is good to hear. And I believe that there are no casualties as well. Just hope that that data point as well is correct. So for the time being, stock under pressure because there's a bit of a risk off that's playing out. And also you had this fire that is denting, sentiment out there.
Take that point, Nigel. Thanks a lot for explaining that to us. Not as bad as the ones that we saw earlier, but a fire nevertheless. But we were talking about Grow's results that were reported just as we were starting the show here, Chartbusters. The stock's holding with gains, but has come off a smidge from the highs. At peak, it was close to around 6% higher. Now it's around 4.5%. For more details on the numbers, the internals, all the stuff that we have, we do have Vivek joining in with the numbers. Vivek.
Well, that's right. When you're talking about India's largest discount broker, Grow, on a year-on-year basis, the numbers are quite subdued. So when you're looking at the numbers on a year-on-year basis, revenue is down by almost 9.5%. EBITDA is up almost 9.7%, but that is mainly on the back of the fact that OPEX, other income, OPEX has actually come down significantly. Other income has moved higher. And also when you're talking about the cost to income, that too has gone down quite significantly. So that has actually aided the operational performance of the company. But on the top line, you've actually seen a bit of a degrowth. But on a sequential basis, when you're looking at these numbers, sequentially, 12.7% growth is what the revenues have seen. When you're talking about the EBITDA, when you're on a year-on-year basis, almost 9.7%, EBITDA margin at 59.3% versus just around 48.9%, aided by the factors that we just mentioned above. Margins on a sequential basis have improved quite significantly. So 59.3% versus 53.4%. And our colleague Devyani says that, when you're keeping aside the other income, the interest component, there has actually been an EBITDA expansion of almost 658 basis points that has led to a 25% jump in profitability on a sequential basis. So that is the good part as far as the numbers of growth are concerned. Year-on-year, subdued, but on a sequential basis, there has been growth across all parameters and significant margin improvement as well.
All right. Thanks a lot for that, Vivek, for joining and giving us a crisp analysis. Well, time to slip in a short break. As we do that, a quick reminder for all our viewers. HSBC presents Future Female Forward Season 3, co-presented by Cognizant. From New Delhi, we bring you the newest state chapter edition with powerful perspectives, action-focused agendas, and a collective vision for accelerated equity. Tune in on the 25th of November, Tuesday, 5:30 p.m. onwards for insightful conversations only on CNBC-TV18 News.
Welcome back. As promised, let's get to the management of CCL products. Chala Srishant, who's the managing director, joins in now. Remember, the company had reported a strong performance in the second quarter. A large part of that was also led by increased prices, increased capacity, and volume growth for the company coming in from their new plant in Vietnam. We do have the management with us, a 50% revenue growth, a 36% profit growth. Chala, the question is the near-term outlook on coffee prices. Yes, it does not affect your margins. Yes, it does not affect your volumes. But what it basically does is, could have an incremental impact on, say, client behavior or your own branded sales, etc. So what's your near-term outlook on that? After this massive rally that we saw in coffee prices, there were some signs of stability and reduction from the highs as well. From where you are, what do you look at when you're expecting coffee prices? How do you expect them to move over the next couple of quarters?
So right now, coffee prices are also at a high because of because of the tariff uncertainty that is there in the US and a little bit about the climatic change and all that. But if you look at the long-term picture, Brazil is actually increasing its production of coffee quite a bit. Vietnam throughput is also expected to be quite good. So all these factors, we're expecting a correction to come in the next couple of months. And that's also one of the reasons why we are advising our customers to take more short-term contracts in the intermediate time and focus on more long-term a little later on.
All right. Hi, Chala. Good morning. Good to see you and Nigel on this side. A quick question on the near term. Mangalam will get back to the demand dynamics. But in the first half of the year, you have grown by 35%. But as it's stated, you're talking about growing the EBITDA by around 15 to 20%. So would you like to upsize that, in terms of a realistic EBITDA guidance for the year? Point number one. And the EBITDA per kg as well is at around 135 rupees. 130, 135 rupees. Historically, you have done around 110 rupees. Is this a new normal?
So right now with this, the guidance, yes, we're looking at more closer to around 20% plus or minus a few percentage points. Now, last year, if you look at it, we had a plant shutdown in Q2. That is why the growth appears to be significantly higher. There will be another plant shutdown that we are planning the next, as in Q3 and Q4 combined. So we are sticking to our guidance of about 20% EBITDA growth.
20%.
Got that.
Yeah.
And
the EBITDA per kg, yeah, it is. There is an improvement in EBITDA per kg because of the product mix with the freeze-dried unit coming online. So and more of small packs. So all these factors are helping us slowly inch the EBITDA per kg forward.
All right. So on that itself, if you could give us a couple of bookkeeping answers. Of your total capacity of roughly 77,000, how much of that is freeze-dried? How much of that is spray-dried? How much of that is in India? How much of that is in Vietnam? And what's the difference between EBITDA per kg when it comes to freeze-dried and spray-dried?
So you're asking for too much details.
That's our job.
But I can give more on a blended basis. So now Vietnam and India both have spray and freeze. We wanted to have that flexibility for our customers, especially when things like tariffs and other issues come up. We should have the flexibility to shift origins. We have about a 6,000-ton freeze-dried capacity in Vietnam, and we have another about 11,000-ton capacity in India. And the rest is all spray-dried capacity, about 30,000 tons in Vietnam and the balance in India.
Got that. And what's the differential in EBITDA per kg between FD and SD?
So it'll vary actually. It's not only SD and FD, it's a little bit more complicated because of the small packs that are there as well. So it gives you a little bit of a skewed nature. But in general, about 15% more is what you can expect from FD compared to SD. That's also one of the reasons why the capital investment is significantly higher for FD compared to SD.
Got it. All right. Give us a few more numbers then. Branded business, I think in the first half of the year has done around 200 crores.
Yes.
That's of the total 300 crores of domestic business. For this year, what do you end up with? And for FY27, what are you looking like?
So we're looking at around 230 to 250 crores is the range that we're looking at for the branded business. And overall domestic business, about 650 is what we are targeting for this year.
650 or domestic, and out of that, how much will be branded?
So branded will be about 430 to 450 is what we're looking at.
All right, 430 to 450.
And for the next year, because this is the one that, the street is concerned about. So the next year, what will it look like? What is the aspiration?
We are aspiring for 1,000 crore 1,000 crore domestic business by next year. So it's a steep jump, but let's see how things pan out.
And what does your market share right now stand at in the areas where you serve already?
So
because overall versus where you serve are two different matrices.
Correct. So that's actually a very good point. Overall, in India, we are today the number 3 brand, but in the regions where we are actually present in, we've actually taken the number 2 position. So especially in the south. So that is a positive for us.
Okay. Right. And what about the debt number, 1,200 crores? What do you end this year at?
So we're looking at around net debt about 1,300 is what we were looking at. It was 2,000. So from that 2,000, we are looking at 1,200 to 1,300 of net debt for this year.
So it'll stabilize at these levels then. Thanks a lot, Chala. Good to chat up with you. Always good to have a coffee in the morning. And we appreciate you joining in to give us a sense in terms of business. Well, on that note, though, we'll wrap up on this edition of Chartbusters. Stay with us. The market's a little under pressure, but trading our team, they're going to be joining in soon.